And today we're looking at a Bloomberg scoop that one of Goldman's highest paid executives is stepping down. Natarajan broke the story and joins us now with more. So Sri, the man in question is Ed Emerson. He leads the commodities trading business. And the headline for me, he made $100 million over the past 3 years. Tell us more about this guy.
Then that is an extraordinary sum. You don't see that kind of money thrown around on Wall Street all that much. Ed Emerson, through his perch running the commodities trading business at Goldman, has clearly emerged as one of the highest paid executives in the recent years, not just at Goldman, but I would venture to say across Wall Street. There is this myth that you can only make real money at the hedge funds, but there are still some seats on the banking side where you can make serious money. And in this case, you have an individual who not only made roughly $100 million in the last 3 years, but that is a sum that is significantly higher than what the CEO made. Granted, there is a culture at investment banks like Goldman Sachs that every year you will have a pocket, a few individuals who tend to make more money than the CEO. But over a consolidated stretch, over 2-3 years, it doesn't always remain the case. The CEO always ends up coming up forward. Maybe one or two individuals beat that rule. Ed Emerson clearly was the exception there.
That contest is significant because in some ways you do wonder whether Ed Emerson is departing because of what's happening in the commodity market or because he's not been on the side of David Solomon in this whole process, this volatility that we've seen inside Goldman Sachs. Is it more to do with the latter than the former?
Well, it is all but fair to acknowledge that there is an element of that. You do know that an individual like this, and through our reporting over the last couple of years, he is someone who's outspoken, has been a vocal critic of the CEO, and not often that you'll have this dynamic where one of your most senior executives can constantly point out the flaws, if you may, of the top of the house, of the leader of the firm. Having said that, this is also an individual who does seem to some extent an institutionalist, still has close relations across the firm, and was a product of the commodities markets. And his success in the last few years, in many ways, encapsulated the madness that we've seen in the commodities markets. Think of all the events that have taken place, especially since the start of 2020, the pandemic and the trigger it provided for the wild price swings in commodities, the Ukraine-Russia conflict, Russia's invasion of Ukraine that followed, and how that impacted those markets. And some of those gyrations have still continued. And that is a period when commodities desks, the bank trading desks that sit in the middle of all this activity, tend to make a ton of money. And Ed Emerson was leading a group that is historically strong, is known for its commodities prowess, and it made a lot of money. And it was a story of a resurgence, a revival for this unit, one of Goldman's most storied desks that all but vanished in 2017, where revenues completely collapsed and there were serious questions about that business. Yet they recovered. And in the last 5 to 6 years, under his leadership, that group has minted more than $10-11 billion. Along with, say, the rates trader at Goldman Sachs has emerged as one of its strongest franchises. And it's no surprise that the individual at the top of that business made a lot of money and therefore had a lot of sway to also be outspoken and blunt about his views around the firm.